Good morning, good afternoon, good evening. This is Will Bridges from 123 Trade. We are just about ready to get this show on the road. Just want to make sure that everybody can hear me. You guys can all see my screen. You should be able to see that little circle of dots going around that play button next to the word welcome right now. If you guys can hear me, just let me know. Give me a quick Y. Thank you. Appreciate that, Ricardo. Fantastic. Let's make sure that we are recording. I know that people have a tendency to get mad at me when I don't do that. So we are recording. We are good to go. How we doing, David? How we doing, Negrel? Lots to talk about this week. I don't know if you guys have been paying attention. Allegedly, Russian hackers have been ransomwaring some pretty big players in the oil industry here in the U.S. So the time marches on, and there's been a lot of jokes people have been making lately because there was this big crisis over this pipeline that got shut down by these hackers, and Joe Biden came out and denounced them, even though he already shut down another pipeline with a pen earlier this year. So it's been a very, well, let's say we'll look at oil today, and I'll show you guys what I'm talking about. But let's go ahead and get this thing going. First things first, cover the risk disclaimer. You guys have all seen this, anybody that's ever been here. And if you ever traded anything with anybody, you've seen something like it. But what it says is that if you put your money in the Forex, you are putting your capital at risk. As I like to say, you do have to risk it to get the biscuit. There is no such thing as a guaranteed trade or a guaranteed win. The only thing that you can control is your risk. My strategy doesn't control the market, and neither will yours. So we're going to discuss that here, how you guys can manage your risk. If you have questions, please, please, please get my attention in the chat box. That is the only reason why I show up here, is to answer your questions. Flat out. I don't come do this trading session for my own benefit. If you have a question, silence is violence. Other people have that question too. There's probably 10 other people with the same question. So I don't want to run anybody over in here. I do want to make sure that everybody, participates and they get what they should out of something like this. I don't want you to come in here and spend a bunch of time, not understanding what I'm talking about and not asking questions. That's not good for either of us. I know that a lot of the names I'm looking at right now are, well, pretty familiar. I recognize a lot of the names in here as usual. Who in here is here for their first time? Is anybody in this session for the first time? Just give me a quick Y in the chat box. It's okay if it's your first time. And also, while we're here, I know that you guys will have questions. I have stuff that I'm already going to show. If you have something in particular that you want to see, understand, then by all means type it in the chat box, because that's what we are here to do. This is somewhat of a analyst on demand style session that we do on Fridays, and really everybody's got a different gap to fill, so I want to make sure that we do that. A lot of you may be familiar with who we are. Some of you may not quite understand who 123 Trade is, but primarily, okay, we assist in getting regulated secure brokerage. That is our number one primary function, is make sure that you guys all have a trading account that you can rely on and trust. Beyond that, we want to do a lot of guidance, mentorship. We want to make sure that you have, well, a lot of you have really fancy tools that you may or may not know how to use. So we want to fill in those gaps, because there's no reason for you to have an amazing trading account if you don't know how to place a trade. So I want to make sure that that's clear today. I'm going to talk about managing risk, how to figure out, well, how much risk is involved in each decision that you make, which I think is a little bit foggy for a lot of traders. But we're going to do a weekly analysis in here. We used to show all these other topics every week. And, placing your first trade, want to make sure that everybody's placed a trade, just if nothing else, to know that their account works and that their setup works. We want to make sure everybody knows you can trade from a phone, tablet, all that stuff. SmartTrader ideas, okay, that's a page. I'll pull that up. I'll actually create a SmartTrader idea today, just so you guys can see that. If your account is not verified, you will not be able to trade. We want to make sure you know how to access tools, charting, all that stuff. We actually built a page on our website to help with that, so that way people don't have to come to this trading session every week and watch the same thing. because I feel like, well, let's just say it got old for me. I can imagine it got old for a good portion of our client base also. But it is there's a page called Getting Started on our website that I think those of you that are brand new are definitely going to want to check out, because then you'll have a way, if you want to set up a MyFX book, for example, we have instructions on how to do that on this page that I just shared. So let's go ahead and get into the fun part. I'm just going to go ahead and pull up charts here. And I know this is what everybody comes to see. They want to see the game. You guys should be looking at my charts. I want to make sure I'm still, I didn't mess up my tech setup here. You guys still looking at my charts? Just give me a quick Y, and then I will. Perfect. Thanks, David. All right. So this USD JPY, I'm pretty excited about. We have a handful of trades running. You know, I've this CAD prediction, I'm glad we pivoted. The pivot seems to be let's just say working out. We are relatively deep in this pound CAD, but I don't know, we might as well take a quick look at these before we get into this USD JPY. So let's check out this pound CAD, come down to a lower time frame so you guys can see what's actually going on. We've entered this twice. We adjusted our expectation. We went from looking for a strong up move to, well, let's just say we went from looking for a strong up move to, you know, a consolidative type of move, which could still happen. And, you know, right now it looks like the market's taking a little bit of a break. Maybe not. We've got a somewhat of a crown formation that's formed here. I'm going to delete this Fibonacci so you guys can see the crown that I'm talking about. And I'll draw this so you guys can know exactly what I'm looking at. This is a little bit higher. Okay, this is really what we're looking for, something like that. Okay, need help in making first trade as far as plotting and placing it. Oh, we are definitely going to get there, Charles. Absolutely going to get there. I'm going to manage a couple of these other trades, and then we're going to get into some new stuff. All right, so for right now, we are looking at a crown here. A lot of traders might dump. We have two open positions here. We're up 150 pips on one of them. It's a much larger position than this other one. I may just take that profit. See you later. We're still in this trade anyways. It's still within my original plan. Whatever. I'm going to take profit on half of my position. Some traders may set up another entry, something like this one that's already here. But the reality is I'm already in this. I'm not going to do anything else. So let's go to the pound Australian. This one we've been a little bit more fortunate on. This one does look like it's starting to take a break, and that we are at kind of a high price where the market has made big turns before. This may be a trend continuation, and we're about, I don't know, how far away are we from our target? 200 pips away from target. And this particular one, we're up 239 pips on. I'm just going to take these. We're going to start fresh on some stuff today. We'll take those 400 pips or whatever and just put them in our pocket. Okay, we are still in the mud on this pound CAD trade. Not a huge deal. This Aussie JPY, this one we have been in for, looks like we got in on April 30th, a couple of weeks. It has been much higher than it is now. It does look like it seems to want to be coming our way as we speak. So what I'm looking at is that this has been an uptrend. Let's go to the daily time frame just so you guys can see how long this has been an uptrend. That looks like an uptrend to you guys, right? This is all the way back to March. Okay, this is the price in March of last year. Let's delete all the stuff on here. It's the price all the way in March, all the way the heck down here. You're talking about in the 60s. Okay, that's 2,000 pips from where the market is right now. Okay, this is an uptrend. I don't care what anybody has to say. So if it does come down, which is possible, that would be a counter trend move. So what I'm going to do is I'm just going to sit here and let our, well, trend continuation happen. There's really not a whole lot else for me to do. We can look for further entries if you weren't already in this, but we are, so I'm not going to play with it. We've been sitting in silver for quite some time. I'll pull up silver real quick. XAG USD. Then we'll get into the new stuff. Silver does appear to be continuing its creep upward. I'm going to show all time on silver. I realize we haven't managed a couple of these in a while because we did a non-farm payroll session here last week and ran a bunch of trading robots. Let's go ahead and get a couple of lines on here, just to get, all-time trend. I want to figure out where the boundaries are on this market and where it decides to pick up and leave and go the other direction. So this was our trend for a very long time. Okay. And then the market went sideways for a good number of years. There's really only two types of trend that I know about. It's either sideways or up and down. And that's really it. So we were in this range for a good number of years. And then we broke out of that range. So, there is a shot that the market comes back down and tries to test that. But frankly, I don't know if you guys have been watching the inflation reports lately. Gasoline's up like 30% this year, which is pretty alarming when the news is trying to make us feel better about inflation. It's a lot better if you don't look at the cost of food or gas, which all of you spend a lot of money on every month, but don't pay attention to those prices, is really kind of what's going on. They're playing a pretty sick game right now. So I think that silver has some serious legs. And the reason why, I'll put this side by side. I'm going to pull up gold. Gold has already hit some all-time highs here recently. So if I pull up gold, and let's put this on the weekly time frame over here. Okay, you guys can see that this was a new all-time high that happened over here. I'll circle this for you so you guys know exactly what I'm talking about. This was a new all-time high on gold. I don't see one that happened on silver. Do you guys? I don't see that. We haven't made it there yet. So that means to me that there's a big disparity in the gold silver ratio. And yes, the CPI numbers, and David, thanks for bringing that up. Inflation essentially means that, well, the value of each dollar is going to go down versus a commodity. That's pretty much how that works. So that being said, let's go ahead and take a look. Retail sales in the US. This came out today. We haven't seen this. This is actually 0% month over month. That's bad news. Same thing goes for core retail sales. That means people are buying less than expected. They did revise up last month, so kind of a mixed bag on this month. But the CPI numbers that David's mentioning, is 0.8%, 0.9%, much higher than the forecast. Kind of scary if you extrapolate that to the year. And other than that, I mean, we really just haven't had fantastic news. I mean, the unemployment rate went up last week in the US by 0.3%, which is a lot. I mean, you're talking about a pretty, I don't know, it's a 5% increase in the unemployment rate. So that's pretty big when they're predicting 1 million jobs created. So, very much lots of delusion happening right now in the news. So that's why I don't like to trade squarely from the news. That's why I don't like to use even just those numbers that we just looked at. That's why I'm going to do all this analysis and figure out where things might go. Okay, so we're in silver in 2 positions. That's something I'm going to let run. I'm not going to play with silver. And for a lot of reasons, this is the monthly time frame we're looking at. I'm just going to show you guys where the resistance is. And we've got R1 here. We've got actually, for some reason, it's only showing me R1. Let's draw the rest of these manually. Lock this tool up here. I'll make this black. And we've got resistance there. We've got more here. You guys can see, like, these levels are very far away. Mid 30s is really the next level of heavy resistance on silver. I think silver's got legs to make some serious moves right now. It's been creeping up. Okay, so this is the nearer term on silver. Okay, so I'm going to get rid of these smart support, smart resistance levels and do my own analysis here. Okay, so this is back to March 30th. So if we're looking for the last, I don't know, month and a half that this thing has moved up from $23, $23.70 range all the way up to 27, that's about a $4 move on silver. That's pretty big. We're talking, 15%. What is that? So a pretty big run. So this thing could come back down, but the truth is that there's no reason for me to believe that when we're still above this trend line. Okay, so that doesn't necessarily mean that it's going to continue to go up and up and up and up and up and up to the sky and never come down and test lower prices. But if I pull my Fibonacci range here, we are looking at a 618 retracement level here. I'm going to go ahead and draw a line here just so we have our current market price and we can mark where we might want to get into this. Should this be, well, I want to know if right now is a good time. So I need to measure my risk and I need to figure out where my risk is, where my potential to get out of this trade might be, where I might rip the tape on life and take my profit. Okay, so I'm going to make this line on the bottom. We'll make this red because this would be a buy position that we're looking for. It just may not be right now at this moment. You know, everybody wants to feel like they're in front of the charts at the perfect time. You're just in time, Batman. You know, it doesn't work that way most of the time, folks. You're usually not going to be in front of the chart at the exact right time. That being said, you know, if we look at this here, we don't have quite a, this is 153 pips versus, you know, 130 pips. So not even close to a 2-to-1 opportunity with my stop loss where it is. If I want to be more conservative, I may pick this higher level of support that happened. And now we're looking at a 2-to-1. This is not a trade that you can place from SmartTrader. So I do apologize for showing this one first. I know the first-time traders are probably not super keen on this one. This is the MetaTrader 4 position you would need to open. Let me actually get MetaTrader 4 going here so I can show you guys. And if you don't know what MetaTrader 4 is, then that link that I shared at the beginning of the presentation to our website, there is a how-to on how to use MetaTrader 4 on our website. For some reason, I can't. Oh, I see what the problem is. I'm sharing the screen and it's clearing out all of my my links, so I may not be able to open MetaTrader 4. Let's see. This monitor 2. Yeah, there we go. Now you guys are probably looking at my background with entirely too much stuff. Make sure you guys are still looking at the right thing here. Does look like you guys are looking at MetaTrader 4. Is that, am I correct? You guys are all with me here, MetaTrader 4. This dinosaur of a program. Give me a quick Y or an N. I just want to make sure you guys are still following along. Perfect. Thanks, David. All right, so we've already decided where we want to get in, and we've already decided kind of that this is a price we're okay with. So let's zoom in here. Okay, this is our 4-hour time frame. And what I'm going to do is this is the 0.01. I'm just going to go ahead and click buy. I already decided I wanted in. My lower level that I was looking to, you know, hide behind is right here. Okay, and my price that we're aiming at above, that is something I am going to have to open back up and look at. Okay, the price we're aiming at above is 28.9. Okay, so 28.9. So I'll come back to my silver here, and I may actually move up the rest of my targets as well, because we have tempered our expectations on this one as the roller coaster of life has happened. And well, let's just say we've placed a lot of trades on silver. It's been relatively volatile. There's been a lot of reason to believe it can come up, especially if they're going to press all this electric vehicle stuff and solar panels and all this other stuff that uses a ton of silver. There's no reason why this commodity should be so inexpensive, especially when we look at something before we get too far into the dollar, because that's what I'm going to hit on next. I want to show you guys M2 money supply. Actually, I'll do it in this same window. M2 money supply. You want to know margin for the silver trade? I'll pull that up real quick. And just to show you guys the risk reward on this trade that I just opened. Okay, the risk with a 0.01 is $86. Okay, so this is not an inexpensive trade. Silver, you know, gold, if you trade a commodity on this platform, I would basically multiply your lot size by 10. That's essentially what you're doing. So if you can't afford to risk $86 on a trade and not blow like 30% of your account in the process, or 20% or whatever, then don't place this trade. That's the best advice I can give. Let's get to a Forex pair. I want to make this a little bit more obvious, but our upside on this trade, we've actually got 2 of them. Let me fix one of these, $143. So relatively solid risk reward on this, especially considering how likely I believe this to be. So M2 money supply. Okay, and this is something, this is on tradingeconomics.com. I'm going to show you guys a comparison of the US dollar money printing versus the euro money printing. Sounds like a, well, let's just say a fight between titans, because both of them have very active printers. So let's go to the euro area. Okay, and now I want to pick an indicator. Let's go to M2 money supply down here. Okay, and you guys can see the comparison here. I'll make this a little bit bigger so you guys can see this. Okay, this blue line is the US. This is how much money exists in the US, this blue line. You can see it kind of blew way past, and is maintaining what's happening in Europe. What this means to me is that the US government wants a less expensive dollar versus the euro. Okay, so you don't necessarily have to know all this stuff. This is just, I'm just kind of giving you guys the reasoning behind why we're looking at the stuff that we are, reason why we're long on things like silver right now. Let's go and check out the USD JPY. This is where I got almost too excited and came here right away. But let's go to the all-time frame. I'm going to bust down all of this analysis top to bottom. We're not going to skip any steps on this thing. First thing I like to do is crunch the chart down. And this is the 1 month chart that we're looking at. So we're looking all the way back to 1993. Okay, so 28 years of data. I want to know what this thing does long term. Most of the time, I want to figure out really what I should be looking for, a buy or a sell, because that's really the most important part. And here's our all time. This is where the market's boundaries are for all of the data that we've got, all time. Okay, so right now we're obviously much higher towards the top of this channel. We've got lots of room below. We still have some room above. So we haven't quite, figured out, okay, here's my trade. And what I like to do is really kind of just work my way down. If I find an amazing trading opportunity on the monthly time frame, then you better believe I'm going to take it. If I have to go all the way down to the 15-minute chart to figure out, if I can manage my risk on something, usually I get out of Dodge and go trade something else. Okay, so right now, there's our inner trend line that's happening on the more recent trend. Let's come down to our weekly. So I couldn't make a decision on my monthly. So I want to come down to my weekly and see if I can make a decision here. And that's really what this is all about. I just want to whittle my way down and take a look at what's going on most of the time. Okay, so we've got this trend line, inner trend line that I just drew. We've been on this trend for a few years just to show you guys what this trend line looked like in the past. Okay, so this was a trend at one point, this line that I've got right now. This, you guys see this wiggling around? Okay, that was the trend. Okay, before that, actually, we had this was the trend and it broke, then the market fell. That was the trend and then it broke and the market fell. That was the trend and then it broke and the market fell. That was the trend and it broke and the market fell. Now, more recently, that was the trend. It broke, the market fell. You guys get the pattern here? Okay, so that broke, the market fell every other time for the last 5 years. Guess what I want to do right now? You guys think buy or sell right now? Stupid question, right? You guys awake? You guys awake? Oh yeah, I'm looking for sells. Okay, I may be able to make a decision right here as well. I mean, that's the cool part about this is that if I want to position trade, and a lot of you might, I'm one of those people that likes to position trade. So I've got a place above my high that happened a couple of months ago. This blue level we'll draw here, that's our current market price. And reality is I just need 2 to 1. This is a mostly sideways range with a downward bias. Okay, so even if I want to just go to levels that the market has turned around at many times, I really only need a 2 to 1 on this trade for it to be a good idea with my strategy, because I don't have to win all the time. And I just picked that price down there at the bottom, for a number of different reasons, and I'll circle them for you. Here's reason number 1, right here. Okay, the market went there and turned around. It went there and turned around. It went there and turned around. It went way past that and couldn't close past it. Couldn't close down here lower than that. And then it worked its way lower. So chances are we actually come way further down than that price. And even if we don't, okay, so if the world changes and suddenly we start to have faith in the American economy and the world economy and everything's hunky-dory, let's smile. Okay, so this is a 400 pip opportunity. Even if we trade the consolidation where this thing has literally gone, how long do I estimate to be in this trade? I would say it could be anywhere from a few weeks to a couple of months. I'm going to show you guys a way to trade this more in immediate fashion in a moment. So this is 185 pip risk. Okay, so if you wanted to take this position trade and forget about it for the next month, which is really what you would want to do with something like this, then you need to figure out how much money you can risk comfortably and not have to worry about it. The market hasn't been above this price that we're at right now in a few months. It's been since actually where our stop loss is. Market hasn't been there since March of last year. And we've printed something like $5 trillion since then. I guess Japan is also in a race to the finish on that. Every major country on this earth has been on a race to the bottom since the year 1972. And I just showed you how fast the race goes on. This is M2 money supply. They're racing to the bottom of value for money. That's what this is. Okay, they are creating more and more and more money at a similar pace, and sometimes they speed up. You know, the blue line coming around turn 4 went ahead and passed the euro. So I don't know how many. Well, I guess there's probably not a whole lot of NASCAR racing fans in here, but the U.S. money printer is on a tear. Okay, so that is something that I'm going to use to my advantage, knowing that they are forcing a weaker dollar, and it just hasn't happened yet. Japan is forcing a weaker yen, and they have been for the last 30 years. That hasn't worked out either. So at this point, okay, so if I want to take this long-term position, I need my stop, I need my limit. On our top side here, we're looking at a risk of 186 pips to try to capture 420. So I'm going to go ahead and type those numbers in, 186, and we'll just say 400 for an even 400 on this one. 2 to 1, love it. Okay, so from a 0.01, okay, this is a risk of about $18, $19, okay, to try to make about 40 bucks. Okay, so the way you figure that out, okay, so this right here, if I put a 0.01 in here and I'm risking 186 pips, all I have to do is take this 0.01, multiply it by 10, which is going to be 0.1, and then multiply it by the number of pips. That's it. Now I know 1860. So if I had a 0.03 here, okay, and I want to know how much money I'm risking, it would be 0.03 times 10. So you get 0.3, and then you take that 0.3 and you multiply it by 186. And you're going to get something around $55. And that's really, really that straightforward. You literally just have to multiply this number by 10 that I highlighted right there just now. I guess I can't zoom in too much on that. I'm trying to do that. But multiply this lot size number by 10 and then by the number of pips. That will tell you how much. And you need to figure out a number that makes sense for you. Because if you're not the type of person that can put $55 out to pasture and not worry about it, then maybe you want to lower that lot size and maybe you should do it with 20 bucks. Maybe you're the type of person that is trading a $100,000 account. Maybe you put something like a 1 there and you risk something like, I don't know, $1,800, $2,000 on a trade like this. Everybody's going to be different. So it kind of depends on what you are comfortable with. The lot size that I put in there is not necessarily the one that you want to use. Okay, so if we commonly risk, say, $50 in this account, I may do this 0.03 like we talked about, and go ahead and click on sell. So now we're in this trade, nothing else to be done with this position trade. And a lot of people might be wondering, well, how can I trade this on a smaller time frame? This may not be something that I want to stay in for a considerable period of time. Maybe I just want to be in this trade for today. Okay, and we've drawn a couple of crowns today. Here's another one. And this looks like a fairly aggressive, bearish crown. Okay, that's what I'm looking for on the long-term time frame. It is a 100% match for the Deep King's crown, which is, well, fairly comforting for me. I like the feel of that. I like the sound of that. Patterns are cool. And those have been around for a long time. As far as harmonics go, the King's Crown is probably one of the most popular patterns in trading. The other thing that I want to check, my favorite tool would be the trend line tool. Okay, so we have not yet broken trend here. So we may be a little bit early on this idea here, but that being said, really doesn't matter. Just matters if we can manage our risk. And end of the day, some of you aren't going to want to stay in this for 2 months or a month. It might happen today. That's the fun thing about Forex is you have no idea how quickly the market's going to move. If something happens, the market could move tomorrow and make this move. I can't say it enough. That's why having a stop loss is important because conditions change. Okay. And I want to account for as much of that as I can, but I obviously can't account for everything. And right now we are making a little bit of a move, a little bit of an up move. We are getting a bullish opportunity here. So this thing may be making a little bit of a rise before it comes down. Maybe it's going to the moon. There's really no way to know for sure. Okay, right now there's our near term fib range. Okay, and we've retraced all the way up to our green level above. If you wanted to trade this on a shorter time frame, and this is the 2 hour that we're looking at, considerably shorter than our first trade here. Let's I want to move this red line, not that one. I've got too many red lines in my life right now. All right, here we go. So I want to be outside of my AB boundary, okay, and I would be looking to exit at my corresponding green level below, and this would be a sideways trade. So this is a much, well, easier position to manage from a risk standpoint, I would say, because it's a 60 pip risk, 65 pips. The intent to capture something like 160 pips. So from a risk reward standpoint, this is a little bit easier to manage in the essence that you don't have to trade it so small. A lot of people think, what lot size should I trade? I'm going to trade micro lots or mini lots all the time. I'm going to trade, 0.2s all the time. And I used to do the same thing. But the reality is that I don't do that anymore. Now I risk the same amount of money every time I place a trade because I have a certain amount of value that I place on all of the decisions that I make because I know how much money I've lost or made on my decisions in the past. I know that I've made thousands of dollars in a day before. I've also blown thousands of dollars in a day. I know that I've blown 20 bucks and panicked about it before. Those years are gone, but I'm just saying that everybody's got a different state of mind that they are in, and you need to understand how clicking the buy button affects your emotions. And really, the only reason why it ever affects my emotions is because there's money attached to it. I've never stressed out about a demo account before in my entire life, and I know that some people have. Everybody's different. I'm a risk taker, always have been, and that's just the way that I am. I like to drive fast. I burn a lot of gasoline, but this is a smaller trade, so I don't necessarily have to look. So if we're going to risk 65 pips to try to get 160, and I want to risk the exact same amount of money I just did on the last trade, which is about $55, then I might put something like a 0.04 in here. Excuse me. We did $55, so I would need to go heavier than that. So this might be something like a 0.08 or a 0.09. Okay, so I can go a little bit heavier because my risk is a lot closer. This trade's going to be done a lot sooner. It could execute and be done fairly quickly. The last time a move this distance happened, this is really how I guess how long something is going to take. It took, I don't know, 7, 8 days. This might be a swing trade. This might be a week. So I'll go ahead and click sell. Okay. And then there's even more of you that are going to want to trade something like with an automation, myself included. Maybe you want this thing to take, maybe you want to trade with something that's going to take profit on this a lot more often. So I'm going to go ahead and take a picture of this previous trade. Actually, I want to show the longer term position. Or did we move that? We did move that. I'll just take a picture of this one. Here we go. All right. And now I want to show you guys how to do this with automation. Okay, so let's get another chart open on our USD JPY. And what I'm going to do is I'm going to go ahead. A lot of you guys have the zone scalper automation. So I'm going to demonstrate how it works. Okay, so this is our 15-minute chart that we're on right now. If I want to turn on this robot, I've already done a bunch of analysis. I've already decided I think that down makes more sense. And, maybe it does, maybe it doesn't. I'm going to add another filter to my thought process here. Not so much my thought process, but my trading process. So I'm going to click on my Smart Script button up here. I'm going to look for my zone scalper. Here we go. And now I'm going to click play. Visualization, this button, it will just show me the indicators. So I can know that it's actually I can look at the tools that it's using to make its decisions. I don't actually have to sit here and make decisions. The system's going to do that for me as long as I don't shut off my computer. Okay, so I wanted to look for sells because I think that's a good idea because we're at the top of our, short-term downward bias sideways trend. I think this thing is going to come down. If the market happens to decide to go to the moon, this thing's probably not going to make a whole lot of sells on the way there. It's going to confirm all of the indicators that it's using are in a sell position and then enter. Okay, so this max trades, this is important. Okay, this is telling me that this robot's going to open up to 5 trades. Okay, lot type, I can do risk percent or fixed. Okay, risk percent's neat because you can use mask risk percent of say 5% if you wanted to. So that would be 1% per trade, or I could lower this and make it something like 3%, which is a lot more comfortable for a lot of people, maybe 2%. Okay, so being conservative is not a bad thing. If you let's just say if you do a 5% return per month, that's an 80% return per year. That's about 4 times as good as what the S&P 500 does. And in my opinion, not something that, well, I mean, many of you have probably done 5% in a day many times. And many of you have probably blown 5% in a day many times. Myself included, I've done that too. I'm not here to talk down on anybody. I've just done this before. So at this point, hidden stops, real stops. Okay, what these two buttons are, hidden stops means that the the system's not going to send your exit prices to the broker until the indicators say that it's a good time to get out. And some people, those of you that think the broker is out to get you, that might be better for you. The real stops, if you don't have a virtual private server, probably the better way to go. Kind of up to you. I like the hidden stops. So once again, I mean, that stuff's there for a reason. But I do like that a lot. Stop loss type fractals, fixed, not used. Fractals is going to be a little bit, it's going to move more, okay, because fractals is going to use a previous high or a low to decide where this system puts its stop loss, which I like. Otherwise, you can set it to a fixed stop loss if you want to make your stop loss the same size every time and risk 20 pips or something. But I personally don't like that very much. I like the fractals. So this is going to add pips to the fractal. So the fractal, basically the previous high or low. So it's going to be 10 pips beyond that, or I can set it to be 5 pips beyond that, or whatever. Okay, so that's kind of up to you guys. If you guys want to play around with that. Obviously, if you are using this on a lot of different currency pairs, different settings might work better on different pairs. That's a fact of life. But that being said, most of these settings, I'm just going to leave. Okay, I want to use the fractals. I'm going to leave all the stuff mostly like the way that it was set. The part that's most important to me is that I know how much money I can risk in here. It will open up 5 trades and risk 2% of my account. That is the most important part to me. After that, I'm just going to apply. Now this thing's going to start looking for, once it gets loaded in, this thing is going to do nothing but look for sells all day, every day. And I make this joke a lot, but it's going to be like the Terminator looking for John Connor. It will not eat, will not sleep. It will just look for good places to sell on the dollar yen because that's what I told it to do. And this robot is, the equivalent of an employee. I need to know how it works, what the limits of its decision-making process are. There are decisions that are, trunk decisions and leave decisions. If any of you have ever run a business, there's decisions that you will make, but you will not let your employees make. Okay, so I don't want to let my employee, my robot, decide how much money to risk. That is a decision that I make. I will let my employee, my robot, decide when it's a good time to get in because it's going to follow strict rules. It's going to do the same thing every day because it only knows it's a one-trick pony, and that's really all it is. So I wanted to look for sells. I'm going to set it, forget it, leave it alone. I don't have to do anything else on this USD JPY anymore. This is taking a minute to connect for me here. But now we can move on. Let's go ahead and get another chart going. If you guys have a specific pair you want to see, then let me know. I'm going to show the Euro USD here next. Everybody's favorite. Go ahead and turn on the all-time frame first. And I already showed you guys the money supply. And well, let's say the US is really, really trying to outprint Europe right now. And that'll be obvious once we draw a couple of lines. So I'm going to do the same thing I did on that USD JPY. I'm going to draw my boundaries where the market likes to, pick up, turn around, leave, and go the other direction. Okay, that's what I'm looking at. Okay, that is our outer trend. That is the absolute outer trend with all of the data we've got. That's what we're looking at. Okay, so now on the top side, this is what we've got up top. Okay, so maybe, just maybe, well, this has been an uptrend for years. We're talking back to 1993. It's been a downtrend for these last few years, and I'll go ahead and draw a couple of counter trend moves here. Okay, so here's the first one. Okay, that happened a long time ago. We broke out. The market was all the way down at 103 when that happened, and then it hied out all the way at 160. Okay, so it came all the way down to 108. We didn't actually make it to those lows that we hit at 82 cents all the way back in the year 2000. Okay, so this has been an uptrend. We've got higher lows. And if you guys can see what I'm talking about, I'm going to make sure that everybody understands. Okay, this is where the euro was in the year 2000. Okay, well under $1. Here is a low that happened in 2016, quite above where we were before. So it made a higher low than before. And actually, we got an even higher low here. Okay, so this is making higher lows. It's also making higher highs. It's just taking its sweet time to do it. Okay, so maybe, just maybe, we end up somewhere here at one point, 192. That would be a heck of a call to make at this point in time, especially when a lot of people are expecting the world to end before we get that far. I don't know if you guys watch anything on Netflix, but between the seaspiracy that's going on right now and the greenhouse gases, everyone's telling us we're all going to be off this earth sometime in the next year. I don't think that's going to happen. I'm making a joke if you guys didn't catch that. Everybody always tries to say that things are worse than they probably are. Most of what I think I see on TV is, well, it's just that, it's TV. Okay, so here's the counter trend that's been happening, and we got faked out year after year. Okay, so here's a trend that broke and the market fell, broke and the market fell. You can only get faked out so many times. Okay, so this most recent trend, we broke, and we actually formed some support on the opposite side of the trend line, on the right side of the trend line. If you guys heard me, the physical right side, the right side. Okay, that's the side of the trend line that I want to trade from, the right side. Okay, if I'm going to look for a trend reversal, that is, then I want to trade from the right side of the trend line. So that said, we made that clear. I want to figure out where we may be able to get into this bad boy. We've got, well, let's just say if this thing goes all the way up to 192, we've got plenty of time to get in as a buyer. 192 is going to take many years. Okay, that may never happen. Okay, so we'll have 3 presidents in that period of time. Anything could happen. Okay, just if that does happen in 15 years, you guys remember that I said that today. Let's go ahead and add another trend line here. We've got a new low. Let's zoom in a little bit here. Let's come to our weekly time frame. Okay, so we've already formed a true low. Okay, so we've got 2 to the left, 2 to the right on our weekly time frame. Right here. Okay, right there. We've got a true low, kind of tested the lower trend line that we had there. And a lot of people are looking to sell this thing right now. I think retail traders are looking to sell the crap out of this right now. I don't think that's a good idea. For this reason, right here, you guys can see how much bigger the US money supply is. Okay, this is only showing you the last couple of years. We can probably zoom in on this. Let's go back to the year. That's not as clean on that one. Let's go to the max again. All right, here you go. This is all time. Okay, so you guys can see we're pretty on par. Now, since the creation of the euro, they tried to keep everything pretty even. And at one point, it was $1.60 per euro. And now we've got considerably more dollars in circulation than euros. I don't think that it makes sense for this thing to do anything but go up. So I'm going to come down to my daily time frame. I'm going to look for a place to get into this thing. Now, a lot of people are looking at this thinking, oh man, it's tired. Maybe it is. I need to figure out what the risk reward ratio is. The thing that I want to pay attention to is what the trend is doing. Okay. What is this trend doing? Here's a near term trend line. So if I think this is an uptrend, okay, there's a trend line right there that we broke out of and we backside tested. And now this thing's making moves. So now I've got an idea. I can just go ahead and pull this smart fib tool from the bottom. This is our daily chart. We got a little bit of a breakout that's already happening. So maybe we're kind of late to the party. Let's check out a weekly chart. And let's see what this move is all the way from the bottom. And we are basically at our AB boundary. So hey, maybe we just trade the breakout. I'm just looking for a place that makes sense for me to aim. Okay, that's at 125, 146. 125.2, I guess, is where this line probably is, if you want to put it on the nose. 125, 324. Okay, so pretty far away from our price currently at 121.3. So this is hundreds of pips away. And now I just need to figure out where I can manage this risk. Okay, so where would I want to get out of the way if this market decides to go the other way? And well, I'm not going to make that decision arbitrarily. I'm going to pick prices that the market's turned around at previously, where it may turn around again. So maybe this one over here. Okay, so the market's picked up and left and turned around at that price before a couple of times. I want a 2-to-1 risk reward ratio. If the market comes down against me, then hey, maybe I'll be upset. You know, I'll pout and I'll cry. Probably not. Probably not. I really think this is coming up anyways, but this risk is, you know, relatively wide. You're talking about 190 pip risk, and I'm going to show you guys more intermediate stuff here in a second. 190 to get 380. Okay, so that's a 2-to-1. I'm in like Flynn. This is exactly what I look for all day long, every day. So let's just say 180, 380. Okay, so this is very much the same thing we did before. If you're the type of person that wants to risk, you know, 18 bucks, 0.01. See you later. Okay, if you wanted to risk $36, 0.02. If you wanted to risk, you know, let's just say something like $90. If you wanted to risk $90, okay, there you go, 0.05. We did it. Okay, 0.1, 0.1. This is a small number. 0.1 is $180 risk on this trade, with the opportunity for 380 if it goes our way. So you very much need to pay attention to that. If this account we always risk, you know, that same $50, whatever it is, I'm gonna do the same 0.03 I did last time. So that's a really important part, is I need to figure out how much money am I risking? Not so much what my lot size is or how many pips I'm risking, but the combination of those two things. I need to know how much money I'm risking all the time, because if I don't, I'm going to be stressed about it. And I don't have time to be stressed. It's Friday. It's the last thing I want to do today. Or any day. Because I'm stressed about this. Those of you that are new, maybe you haven't woken up at 4:30 in the morning enough times to, you know, quickly check your charts and see if you know, hit the lottery. But I don't like to do that anymore. It's stressful for so many reasons. But we're already in this Euro USD. Those of you automation traders out there, if anybody has a specific system that they want to see, then let me know. Otherwise, I'm just going to show you guys the ones that I know a lot of you have. So this particular one here, so a lot of you probably have the perfect storm system. You may run that on something like the 2-hour, 1 hour, totally up to you. 2 hours is a good one. And then maybe we think this thing is going to run for a long time. I'm going to go ahead and just turn this on, type in perfect. And I want this trend storm. It's going to be mostly sideways. most of the time, but I want it to look for buys only. Range active, give it to me. Play, visualization. I only want it to be looking for buys. Lot type, I can do fixed or risk percent. So all these settings are going to be pretty similar. So lot size, 0.01, add position 0.02. So you can change all this stuff if you want to. Personally, risk percent I think is the easiest way to do this. Okay, so I'm going to risk 1% and then 2%. I'm okay with that. And now I'm just going to click apply. And this thing's going to crank on. It's going to run. And now I don't have to do anything. We're already in this trade anyways. I already bought this. But now this perfect storm is going to add positions throughout the week. If it hits a buy situation, it's going to buy. If it hits a sell situation, it's going to do nothing, which is exactly what I wanted to do because I don't want to trade against the trend. I want to trade. Well, if I'm going to have a robot sit and wait for the perfect time to do something, I want it to look for what I think is going to happen most of the time, which is up. So I'm going to leave this as buys only, and I'm going to get out of Dodge. Let's take a picture of this thing. And let's keep on moving. Let's get another chart up here. New chart. And let's pick a fun one. Let's say the Aussie USD. Add. And here's our Aussie USD. Let's make this on our monthly. Zoom out. Oh man, people are looking to start selling this thing. Doesn't it just it seems like something that people have been selling early, I think, for well, the last year. But the reality is this is our monthly time frame. We crunch this thing down. I want the whole world in my hands. Here's our trend on the top. You guys see that? You guys see that? That's up. Okay, the last time that I checked. Here's our trend on the bottom. Also slightly up. Okay, and we had been, prior to last couple of years, Australia kind of slowed down their pace. Okay, so this has widened out. We have this big megaphone looking shape that's happening now. Because for years and years and years, this is what the trend was this. Okay, and we finally broke out down below that. So, a lot of people may be thinking that this is a backside test on this 1, 2, 3. Maybe it's coming down, maybe it's not. Personally, I don't think this thing is coming down. For the same reason why I think that the Euro USD is going to come up, because all we've done is print this year. And everybody's gotten faked out on this Aussie USD for, well, the majority of the last year. The Aussie hit some crazy lows, 17-year lows. They shut down the economy there for a good portion of the last year. And, China's ramped up. China actually had growth last year. They buy iron ore from Australia. So if China is ramping up and they're going to see more growth than the rest of the world, Australia can probably ride the coattails on that. So let's come down to our weekly. You guys don't necessarily have to know all this stuff. I mean, for me, I'm a dork. I like to read the news, and all this stuff makes me comfortable. It makes it easier for me to figure out what to trade also is the reason why I read all this stuff. But this trend line has broke a couple of times. You guys notice it breaks and the market comes back up. Okay, we're doing right now, this trend broke and it's been making moves back up. This is a weekly time frame, and we have a true low that has formed right here. Okay, so we're basically above this trend line again. A lot of people aren't looking at it like that because, well, we broke our old trend line, didn't we? Doesn't it have to come down 300 pips? No, that is not how this works. Okay, so here's a trend line here. The market fell, I don't know, 100 pips, and then it went up another 500 or 600. Okay, it did the same thing again here when we formed this new trend. It broke out, it backside tested, and then it went up 400 pips. Okay, I'm going to expect this thing to do the same thing that it's been doing. That's why I draw these lines. That's why I draw boxes. It's not so that I can draw the trend line. It's so I can figure out what the pattern is, because that's really the most important thing to me. Okay, so I want to know what the pattern is, and if this thing fell a couple hundred pips and this is technically a new low on my weekly time frame, let's come down to the daily. Let's get a closer eyeball on this thing and figure out where we can manage our risk, because that's really the most important part. Let's pull a Fibonacci here from the bottom. This is a hands down. I mean, this has been an uptrend for a long time. It'll be an uptrend until it's not. And frankly, that no one has changed their policies that I've seen and well, at least the U.S. has not changed their policy here. We're going to print more money. You guys know that. The bank has made it very clear that they want to inflate the dollar, pump the stock market. So I'm going to play their game. I'm not going to try to fight against them. I might have for a couple of days, when that trend line break happened, but then we didn't get confirmation. We didn't start making lower lows on the other side of our trend line. So that's really important to me. Kind of destroys my whole strategy if that doesn't happen. So right now what we're looking at, risk reward standpoint, I like it. We've already broken out this higher high that's above. See if there's other, critical prices at this level. Let's see. Has the market turned around at this price before? We've got previous resistance support. This market has been here. Last time it was here, and we've got missed targets. Let's actually turn on the target trading tool. This is a fun one too. Target trading 2.0 is one of my favorites. If you guys aren't aware, there's lots of target trading, but I like 2.0. I don't care what anybody has to say. This is the best one we came out with. I love it for its simplicity. The cool part about target trading 2.0 is that all you really are looking for are missed targets. We don't have any here, so I'm going to work my way up. The next missed target that we have, okay, we've got one above where we're aiming right now. This is a missed target. This is the first missed target that I found. It took me a very long time to get there. Every other target after that has been hit. So I know that if every other target after that has been hit, then I'm going to aim at this missed one. There's another missed one up above even higher, okay, up here. Okay, so if there's any targets that haven't been hit, those are the two that haven't been hit. Both of them extraordinarily higher than the price that we're at right now. Otherwise, literally every other target has been hit. So that being the case, I very much like this continued up move. And a lot of traders are going to panic. They're going to think, oh gosh, this thing's coming down. I know it. It wants to. I'm going to buy it. And the part where a lot of people get lost is, how do you know what direction the market's really going to go? You don't. That's the whole point. 250 pips, 535. Because there's a lot of reasons for things to do all sorts of different stuff. Personally, I just want to follow along with what the trend has been most of the time. Where I have my stop loss, that's pretty far away. If I want to risk 50 bucks on this trade, I can do it pretty easily. And really all I need to do is put in a 0.02 here. There's my $50 trade with the anticipation of trying to make something like 106. Okay, so you can really kind of decide how much you want to risk on every trade. And that's really the important part to understand. If I'm in control of what's at risk, then I don't have to feel like I'm just getting manhandled by the market if things don't go my way, because sometimes that's going to happen. And the reality is that even if I lose half the time, if I continue to look for, big, you guys watched me close out 400 pips at the beginning of this presentation. I can I can cover up a lot of losses with a 250 pip win. So I'm going to go ahead and click buy. Okay. And now I don't need to do anything else with this. If I'm willing to wait the 3-4 weeks it may take for this to occur, it may happen later today. I don't know. That's the thing. You don't have to know. That's the cool part about Forex. If you want to trade something that you have to know that and the direction and where to put, then trade binary options and blow out your account. Because you don't have to worry about. You don't have to worry. I was definitely kidding about that. I'm not a fan of the binary game at all, because it is more difficult. You're adding time. The only reason why you might want to know how long this is going to take is to set your own expectations. And looking at this myself, I would expect 2 weeks, maybe 3. Who knows? But I'm going to let it run. Okay, so shorter time frame. Those of you that want to trade smaller than this, okay, and you want to realize profit more often, okay, this is something that you may want to reel in. Okay, so now we're on our 1 hour time frame. And this is something that is going to be a much, much smaller trade. I'm going to pull another Fibonacci here. Wait, we already got a picture of this Aussie USD? I don't think we did. Let me get this on the higher time frame first. Let's go back to the daily. Make sure I appease everybody. Let's go ahead and take a picture. Here we go. All right, perfect. And now let's go to, I'm going to clear all this stuff out. Let's go to the low time frame. Back to our 1 hour. And we're just going to look at the nearer term trend. We've already decided up is the way that we want to be going. And that's really what this thing has been doing in the near term. So since April 1st is where this trend starts. I'm going to go ahead and draw a fib here. Oop, didn't quite get it. Maybe we need a 4 hour. That might work better. And it did. It worked considerably better. Okay, so now we are, I don't know, somewhere around our 618 range down here below. You know, those of you that wanted to, you know, maybe take a smaller risk on something like this, here's our current price. I'll draw that for you first because it is the easiest and most fun to draw. And actually just change the color on that, sorry. But I like to draw the current market price just so it gives me perspective on the risk reward ratio, because that's really the only thing that's important to me is risk reward. Because I know that I've won a lot of trades. I also know I've lost a lot. So the most important thing to me is that I'm responsible and then I make decisions I can live with. So obviously I want to, you know, flex and try to be right every single time, but I know that that isn't going to happen. As amazing as I think that I am, you know, being right 100% of the time usually doesn't go well. You know, if I try to do that with the other half, you know, if I win this time, I'm probably going to lose anyway. So, I mean, this is very much the same idea for me. We came all the way down to our green level below, so I can't aim for that above. I'd want to aim for the green level up top. This is a much more near-term trade. I'll tighten up my stop loss here, bring it into my A. And this risk reward, instead of the hundreds of pips we're talking about, this is 93 pips, so about half as much risk, half the reward. So much, actually, really a much smaller risk reward. So 250 pips was the risk on the last trade, and this is actually, I don't know, 40% of that. So that's what happens when you come down to these lower time frames, is you end up with a smaller risk. I'll take a picture of this one too. I'm not going to place this one because I'm already in the other one. And I'm also going to show you guys how to open up a robot on here as well. So let's go down to, say, our 2 hour chart, maybe our hour. One of my favorites is the power candlestick auto. If you guys want to try out robots and different types of robots, not to get too far off task, I'll show you guys what Build-A-Bot is here once we get done. So if you have an idea for like a couple indicators to combine and you want something to make a decision on something simple, then Build-A-Bot is pretty awesome. You can actually learn how it works and watch all the videos on how to set it up before you buy it. It's not expensive either. Well, let's just say, because we've kind of eliminated the need for the developer to build it. So if you have an idea and you want to build it, Build-A-Bot does that. And I'm not a developer myself either. Fortunately, I have the SmartTrader team to help me with that type of stuff. But if you don't and you want to build robots, then Build-A-Bot's where it's at. So the reason why I like this power candlestick auto, and I'll turn this on. This is one of Jared's that he came out with. It's probably been a couple of years, maybe a year and a half. Looks like the most recent version is in February, I guess. So they've updated it and all that fun stuff, but I know this has been out for at least a year and a half or longer. But what this system does is it's going to bias its direction up or down. I'm going to turn the visualization. It's going to use candlestick patterns to enter. So it's going to look for momentum in the market, which is exactly what I'm going to be doing anyways. So I only wanted to buy bullish. I don't want it to buy bearish. I could have it buy bearish signal. So if it does get a bearish signal, which means if the market makes a hard move downward, then I would look to buy, which is actually pretty neat. So some people might leave that on there. So maybe we just look for buys and we buy every candlestick pattern that happens, whether it's a bearish or a bullish signal. Why not? People get faked out every day. I've already showed you guys fake outs with trend lines on every single currency pair that we've looked at today. So if I know that's what the pattern has been, I might just roll with that. Okay, so otherwise, the rest of the stuff is figuring out how big a stop loss is, all that type of all that type of jazz. I'm going to leave this stuff as really what it's built to do. Lot type, I'm going to leave as a risk percent. Okay, I'm going to leave it at that because I like risk percent. It makes sense to me. Maximum amount of trades. If I'm going to risk 1%, I only want to risk 2% total. So maybe it's only going to make 2 trades at a time, and it'll close out, take profit, look for more moves, maybe not. But there's my power candlestick auto, and this one is very straightforward. Okay, this is a chandelier and I think candlestick patterns. And obviously it's got its own risk management, entry, exit, rules, all that stuff that we just saw that some other, well, when I say some other, that Jared and Chris Pulver put together, who I think are probably better traders than I. Well, maybe not better. They're definitely more experienced. I have a hard time saying anybody's better than me at something that I think that I'm very good at. But granted, Chris is amazing, probably one of the best traders in the world. If there's anybody I can say that I'm comfortable with, it's Chris and Jared. But that being said, I won the trading competition at the company last year. So if anybody wants to talk, then we can look at that. So what this system is going to do, it's going to look for bullish candlestick patterns now. So all bullish. Okay, so anytime a bullish candlestick pattern happens, this thing is going to enter. So that would have been prices like, well, actually none of these yet, because we did just get a chandelier on the bottom. So this thing has just started looking for buys right here. That's where it started looking for buys because it just broke trend. Fun part is that we just bought. So we actually already agreed with this system before and we didn't even know it. But the reality is I don't have to do anything anymore. We've already added a position. This thing's going to add more positions. Nothing else to be done, right? There's a setup here. There's probably one on the NZD USD as well. So we're going to look at that one before we go. And we'll open this one in the monthly time frame. Add. There we go. And this looks very much like the same chart that we looked at for the Aussie USD. And I'll show you guys exactly what I mean. We've got our all-time, outer trend on the top. There you go. Here's our all-time outer trend on the bottom. Very much the same thing. A little bit more narrow, less megaphone-ish, more like a channel. And the reality is, I mean, this was really the trend for many years. It's been tested before. Very much a pretty obvious channel that we are likely bouncing back towards the top of because there's lots of demand above we haven't reached in a long time. We've already tested this level. And when I say this level, I'm talking about this one right here a couple of different times. So I don't see any reason why we can't break out of it, especially if the US is going to print dollars to the moon and New Zealand actually fared pretty well with coronavirus. They didn't really have the crisis that existed in most of the world. New Zealand was used as a model, to prove how inept the US government was for a while. So that being the case, I also look at this here and I say, okay, our all-term trend for the last 30 years is up. There's a counter trend line break right there. And we've already got support twice on the right side of this trend line. When I say support, I'm talking about these levels. Oop. Right here. That's support. Here's more higher support. So this is making higher lows. Okay, and that being the case, let's come down. Let's zoom in. Let's hit our weekly time frame. And I no longer need some of this stuff here because it's just in my way. I've already decided that this is not a downtrend anymore. So goodbye, downtrend line. And I just want to have what I have on here I just want to have on the chart what I need to make a decision. Okay, and I'm going to show you guys the same fake out thing I showed you on all the rest of these. There's a trend line break, massive fall. When I say massive, it was like 100 pips. Okay, and then the market went up a lot more since then. Here's another trend line break. Same thing. Okay. And here's the most recent one. Okay. So that being said, we've already got 2 candles to the left and 2 to the right. And what I'm talking about is that this candle here, here's one. Oop, let's lock this tool up. Here's candle 2. Okay, and we've got 2 to the right. There's 1, and here's 2. Okay, so this low right here is another true low. Okay, so I'm going to move my trend line just like we did on our Aussie USD, and I'm going to move this up here. And now this looks very much like we are above, because we are. This has been an uptrend all the way since March of last year. You could either say, you know what, this is the top. This is the end of New Zealand's prosperity. I'm taking this thing to the floor. Probably not. Okay, they have one of the most stable economies on earth. Those of you that aren't aware, New Zealand is the central bank that came up with the idea for the inflation target of 2%. Okay, so they are the ones that figured out how to stabilize Keynesian economies with 2% inflation targets. And that's what every major economy does now. The US is doing it, the UK is doing it, everybody is doing it. So it's not something that, I think that the NZD, the New Zealand dollar, is going to fall to pieces because, well, let's just say they are very much world leaders in economics. So I'm not going to expect them to fall apart, especially when the chart is telling me that the trend has been up since 1993 overall. It's not been fast, obviously, and we've been in the top and the bottom of this trend. But the truth of the matter is that this thing has been moving up for a long time. I'm going to figure out where the Fibonacci ranges are. And right now we have broken out of this range. You guys see this candle wick that broke above, and we never hit our extension because this bounced from our red level below. And what I'm talking about, this is our most recent AB boundary. I'm just going to draw this. Okay, this is what I'm going to expect to happen. Something like that. We're already a third of the way there on this extension wave. Okay, so we are a little late to the party on this move. Here's where we might rip the tape on life and stop buying this for a while. And here's our current market price. I like to draw this every time, just like I said, so I can have perspective and I can figure out, well, where I am in relationship to all of the other prices that have ever happened. So if I zoom out on this, I can look and see, okay, is this a critical price level? Did we break a pivot? Have we broken some highs that haven't been broken? I mean, that's why I want to look at this type of stuff, is to know where we are. Was this a critical price level that we were at? A little bit lower before this thing turned around. We had some pretty serious, actually, I'll pull this down to this level that formed years ago. Okay, and now we'll come back to our current time. That blue line, okay, is now set to a level that was heavy resistance all the way back in 1996. Okay, so that's what I believe that we bounced off of, is that price that people cared about in 1996. And then again, years later in 2005, 2004, and then again in 2011, that price mattered again in 2015. And that's what we just bounced off of. So I'm going to look for longs, okay? And I'm going to pick my previous low here that's on the other side of my trend line. Because if we break this trend, we make a lower low, I want out of the way. That's really what this boils down to. Risk reward's pretty amazing. Had we gotten in at the perfect time, we missed that. Right now, I want to measure it and look what we've got. We've got a 549 pip opportunity for a 335 pip risk. I may want to tighten up my risk on the bottom a little bit, risk slightly fewer pips. Let's zoom in here. Because I don't necessarily have to be, 50 pips below the previous low. So now this is probably a little bit better risk reward ratio than what I just had. 293 to try to get 565, almost a 2-to-1 for a position trade. Very high probability, in my opinion. I'm going to take it. Okay, so this is a 560 pip opportunity. And so far, I think in the 4 pairs we've talked about, we're looking for something like 2,000 pips. Okay, so we are making absolute huge calls. And we're also looking to take profit intermediately with our robots, because that's what they do. So this is a 290 pip risk, okay? Oh, something happened there, 290, okay? And if I want to risk that same $50 that I've been risking something equivalent to that, then I might do this 0.02 again. Because the 0.02 is going to be a risk of roughly, I don't know, $58. And I'm going to try to make something like almost double that, $100 or so. If I want to risk more than that, obviously, like I said before, you multiply this lot size by 10 and then by the number of pips. Okay, so if you want to risk $3,000 on this trade, then put a 1 there. That's it. That $3,000 risk is for a, $5,600 opportunity. So a lot of people are going to be comfortable with that. You may not be. Do not trade that way if you can't afford the risk. That is the part to understand, is how much is the risk. So I'm going to click buy. Now we've decided that we want up moves on this NZD USD. So what I'm going to do, I'm going to take a picture of this thing. And I'm going to show you guys how to turn on another robot. More fun. Another one of my favorites is the Right Trader Max. So I'm going to come down to my 1 hour time frame. And I'm going to turn on my Right Trader Max. Click play. Visualization. I only want buys. Buy bar chart time frame. I'm going to leave that. Max trades, we'll say 3 risk percent. Actually, let's risk 2% of our account at any given time with this whole pair, with this robot, I should say. So if this thing finds buys, it's going to risk up to 2% in 2 different trades. Okay, the rest of these settings here, I don't necessarily need to change. You can if you want to. I have a lot of faith in Gary Fickhart and Chris Pulver. So what I'm going to do is I'm going to go ahead and click apply and start. And this thing is only looking for buys, like I said. Fun part is we just did our own manual analysis, and this thing is in a buy zone. These candles are green. We're outside of this gray area. This is in the buy zone. That's what this is. This is the buy zone for this system. So I don't necessarily need to do anything else here. I can let this run. We're already in this trade anyway. Okay, so I've got nothing else I want to do. I'm just going to let this stuff run. We've got multiple different robots running right now. I'm running my Power Candlestick Auto, Right Trader Max. I'm running the Perfect Storm. And we opened some manual trades as well. So I've got nothing else to be done. I'm just going to wait. I'm going to let this thing look for trades, take profit, do what it does. We closed out 400 pips at the beginning of this. We've had a little bit of movement during the presentation, which is kind of anticipated. We've actually already had our robot open up a trade on our USD JPY. So really, there is nothing to be done here, folks. I'm going to let the rest of this stuff run. I'm going to leave my computer running all day, all night, all week, and just let this thing take positions. So those of you that are looking for robots, stuff like this, if you don't have one already, obviously Market Trader sells that stuff on our website, just so you guys are aware. If you guys do pump up your trading accounts, there are opportunities for you to get free access to trading robots. So if you guys do have questions about that, then you can check out this page where all of this access is listed. Okay, and if you guys want to know more about, other things like the Build a Bot system, we don't sell these products directly. I'm not here to hard close you on anything, but if you have a strategy that you want to test and automate, that's what Build a Bot does. Okay, that's exactly what that does. This is on our recommended trading products page. I'll share this also. Smart Gauge is another thing. If you want to figure out, long-term trend direction, those of you that, are really good at drawing trend lines, doing technical analysis, you guys just saw me do all that. That's how I figure out long-term trend. Smart Gauge is probably one of the most popular tools that SmartTrader has ever released because it uses 33 indicators to figure out up or down. And you can use that on 5 different time frames at once. And, a lot of traders are just going to have the smart gauge tell them if the trend is up or down and then bias a trading system to buy or sell. That's it. Okay, Chris Pulver is the best trader I've ever watched. I know I made some jokes earlier about how I won the trading competition. That was 1 month. Chris is amazing. Okay, this is really the guy that helped get me over the edge and helped me understand risk management more than anything else was Chris. So all these things here, smart analytics. Okay, I'm not sure if you guys know what smart analytics is. I showed you guys a lot of manual analysis. I wonder if I can get another chart up here. I guess I'm maxed out on charts. Maybe we go to a, I just want to show you guys smart analytics real quick and then we'll get out of here. But let's go to a pair we haven't looked at. And then let's just say GBP USD. We haven't looked at that one. Okay, smart analytics is actually for some reason not turned on my charts right now, do I? They dumped my tags. Maybe not. Maybe I can't show that to you guys at this exact moment in time. Let's hold on here a second, folks. I'm just adding the access to this for me. For some reason I'm missing a couple of things here today. Would be W Bridges. And I should have it. That's interesting. Maybe I'm in my other account. That's probably what this is. Bridges at 123. And I am. Let's just refresh this page real quick. All right, cool. I think that worked. And smart analytics is kind of a shotgun approach. Okay, so this is going to draw every line that it finds. Okay, so there are all of the trend lines that this thing is important. And the darker the trend line, the more important that it thinks that it is. We've already broken above the red lines that are on here. So this is basically telling me to look for up. And now if I want to look for Fibonacci's, you guys saw me pull all these manually. This is a little bit different. All I do is scan for Fibonacci's with this tool and it finds all of them. So then I find this level that I may want to trade towards. Okay, this is the same level that we looked at right there on pretty much everything else. Okay, so current market price right there in blue and my stop loss below. Let's go ahead and get this on here also and zoom in a little bit so we can find a good one. There you go. There's our opportunity on the pound USD. And I didn't really have to do a ton of analysis. I just scanned, we did it. And now I can put in my stop limit, move on with my life. And we didn't have to spend a heck of a lot of time trying to figure anything out, especially after we already figured out that we're looking for sells on the dollar. This is a 300, 490, 300 pip risk, 490 pip opportunity. Some of you are going to look for heavier risk reward rates than that. That's up to you. As far as the $50 person goes, if you wanted to risk $50 on this again, it's gonna be a little bit more difficult. This is gonna be 60 if I do a 0.02 to try to make about 100. I'm okay with that. I'm gonna go ahead and click buy. But there's a reason why we recommend the products that we do. We don't recommend everything that's ever been released because generally I don't think that you necessarily need to have everything. I don't think anybody needs to have, 50 different robots. Maybe you do. I just ran 4 different ones here. I think if you have 2 of them, you can probably do most things. But these tools I put here because they are good for people that are new, that don't understand how to read indicators. That's what Smart Gauge is all about. You don't have to read indicators. You can follow along and trade with Chris. That's why we recommend this type of stuff. So if you guys want to check that out, it is on this page. We also have those of you that don't have SmartTrader access anymore, we can get you $25 off on SmartTrader Prime as well. But we are out of time here, folks. I think we've got pictures of everything already. I'm going to post all of these in the groups, in the Discord server, and also in the Facebook group. Those of you that are not in the Facebook group, if you want to see something specific in this session on Fridays, then tell me. Then tell me. There's the link to the group. Please join if you are not already in the group, because that is where I post everything. It's where I'm going to put all these trade ideas. Same thing goes for Discord. Okay, here's Discord right here. I'm going to go ahead and share this link for you guys also. Copy And I actually get these messages on my phone. So if you have an issue, don't get a tissue, send me a message and we will fix it. I think somebody had sent me a message yesterday because they couldn't place a trade on something and we fixed it. That's what we're here for. But we are just about out of time here, folks. I appreciate everybody coming out. I love doing these sessions. Always an absolute pleasure to do this with you guys. But I will have the recording in the Facebook group as well as the Discord channel sometime in the next hour. You guys should also be receiving emails if you registered for this webinar. You should be getting an email from GoToWebinar with a recording of this an hour after it ends. Okay, so that should be automated. Doesn't always work perfectly, but if you register for these sessions, you should be getting the recording automatically in your email. Otherwise, it's going to be in these groups. So by all means, give us a ring if you need any help. That's what we, again, are here to do. But it is the end of the session here today, folks. Thanks everybody for joining. Again, I'm Will Bridges from your team over at 123 Trade. Always a pleasure to serve. You guys have a wonderful rest of your day. Enjoy your weekend. And as always, be good or be good at it. Take care, folks.